Welcome back. With the Federal Reserve set to meet next week, we've got expectations, of course, of a 50 basis point hike. Our next guest is joining us to break down how it could affect the dollar. The dollar, which has been on just an incredible run. Christopher Vecchio is joining us now, dailyfx.com senior strategist. It's taken a little bit of a pause today, Chris, but the run has been fairly incredible here. Is there anything that's going to stop it, particularly with the Fed continuing to raise rates?
Hi, Julie. Good to see you again. Right now, a lot of this is driven by that growing juxtaposition between Fed and ECB policy, Fed and BOJ policy. As it were, as we've learned from several Fed speakers prior to the communications blackout window, there is this growing sentiment that they should front load aggressive rate hikes in order to combat record high inflation. So instead of getting 250 basis points worth of hikes spread out through the end of next year, odds are that we see the bulk of that coming over the next few months, perhaps a 50 basis point rate hike, not just in May, but also in June and July as well. So this has really accelerated the dollar's gains here in recent weeks. The market, of course, has just come to terms with the idea that the BOJ is not giving up on its unlimited bond buying program, on its QQE with yield curve control, that the ECB will not be raising rates before the end of the third quarter, despite for so long the market pricing in a July rate hike by policymakers in Europe. And so this has just been a really aggressive, accelerating environment for the dollar right now, something that we actually saw reflected in the GDP data yesterday, where net exports took a significant hit and weighed on overall growth here in the United States. So it's a problem that the Fed may have to contend with down the line. But for right now, the dollar remains well positioned as interest rate differentials support what's been truly a king dollar environment.
Chris, at what level for the dollar would it become a major headwind for markets?
I think that we have to see if we can push a little bit higher from here, because right now the U.S. dollar strength has not been that big of a deal for broader markets. We just moved to our highest level since March 2020. In fact, eclipsing that, the DXY moved up to its January 2017 highs before turning lower here over the past 24 hours. I would think that we probably see another 5% in the dollar index to the upside before policymakers begin to get a little bit agitated about this. But this is not really something the Fed can do anything about. It has to pick and choose, very much like the BOJ has picked and choose. Do they want to raise rates? If so, you're going to get a stronger dollar. If they back off on the rate hike cycle, that's really where the weakness could come in. But that's not going to happen for several months. This idea yesterday that because we had a weaker GDP report, the Fed was de-hawking, if you will, to me was completely nonsensical. The Fed will move forward with 50 basis points over the next few meetings, regardless of what 1 or 2 quarters of growth say, because this inflation problem is one that needs to be arrested.
Right. It's definitely, that still seems to be the consensus view here. I'm curious as well with the dollar strengthening. We've heard some companies talking about currency effects this quarter a little bit more than they had been. But what are you looking for in terms of that commentary? Do you think that's really going to start to weigh on some international companies, internationally exposed companies, corporate earnings?
Absolutely. Moving forward, when you think about the global environment, you not only have a strong dollar, but this high inflation is really everywhere. So if you are a consumer in the UK, in Europe, in Canada, you not only are dealing with record high inflation, multi-decade high inflation domestically, but now your currency is weakening very rapidly. And so you as a British or French consumer buying American goods, your purchasing power is being hit on both ends of this. At least for here in the United States, we have some insulation thanks to our stronger currency, relatively speaking. That's going to be a problem coming up in earnings for the second quarter, especially given what we've seen in the month of April. It's been a really torrid run here for the dollar. Dollar yen making a very strong advance. Euro dollar falling below its March 2020 lows. Parity is certainly on the table now, at least in my realm of discussion. It's one of the questions we've been getting asked a lot by clients. Can we see 1-to-1 for euro and dollar? And if we do get there, that's going to be a very unique, challenging environment for a lot of U.S. corporates. Does
the stronger dollar suggest, Chris, that consumers might see an easing of inflation, at least when it comes to their wallet?
It may not show up right away in particular because we have so many supply chain issues that are persisting. One of the more alarming data points that's emerged in recent weeks has been the fact that Chinese outbound freight, as a result of their ongoing zero COVID policies, has now hit its lowest level during the pandemic. Not the lowest level since March, but the all-time low since the pandemic started there in December 2019. So these supply chain issues will continue to persist. As we saw in the GDP report, U.S. consumption continues to strengthen, in part because prices are higher, but also because the U.S. consumer is just so strong relative to the rest of the world. And that means that these bottlenecks will continue. So are we at peak inflation? We're probably close to it, but seeing another month or two of very high price pressures here in the U.S., likely to happen. And the dollar, regardless of where it stands, even if it goes up another 2 to 3% right now, won't necessarily help the situation.
Well, Julie, maybe that strong dollar will help keep the price of Amazon Prime under wraps. Let's leave it there. Christopher Vecchio, dailyfx.com, senior strategist. Have a great weekend.